Hi, this is Adam Newman, partner and senior wealth advisor at Burney Wealth Management, and I'm joined here today by Kyle McFarland, one of our wealth advisors. And this is Byte Size Retirement, where we take common retirement planning topics and break them down into bite-sized 5-minute pieces. These videos are not investment or tax advice, but hopefully remove some of the mystery and provide a solid foundation to plan off of. Remember, while we're taking 5 minutes to explain these topics, definitely don't take 5 minutes to make these important financial decisions. Today, we're going to focus on charitable giving and specifically 3 tax-efficient tools to make charitable gifts today and during your lifetime. And I'm going to start with, I think, an easy one, which is donor-advised funds. So typically, when we think of making a charitable gift, we give cash or write a check, and we may or may not get a tax deduction in the year we make those gifts, depending on if we itemize or take the standard deduction. But what a donor advised fund allows to do is it allows us to make a lump sum gift into an investment account, which is tagged as the donor advised fund. And in the year we make that lump sum gift, we receive a tax deduction for that gift, subject to the typical AGI limits for charitable giving, which is up to 30% of your AGI if it's a gift of appreciated securities, or up to 60% of AGI if it's a gift of cash. And so we make this lump sum deposit, we get a charitable deduction in correspondence with those limits. But then the great thing is that we don't need to make an immediate gift to charity. The money can stay within inside of that account, and gifts can be made, spread out over a period of time or throughout our lifetime. So these are fantastic tools for those transition years, specifically in the years in which we're transitioning into retirement, where we might have charitable intent, but our income is about to go down substantially. So when our income goes down, as does our limit, those AGI limits start to bite. And so the amount at which we can deduct, for charitable purposes goes down along with our income. So if you've got, a year or two before you retire, you'd like to be making charitable gifts over your lifetime, you can front load those gifts into this donor advised fund, get the immediate tax deduction, but then still spread out those gifts and payments over many years. So a great tool, and one of the common ones that we see, specifically when we're helping clients plan for that transition into retirement. So Kyle, you're now going to go ahead and talk about QCDs.
Yeah, thanks, Adam. And while donor advised funds can be great for people in retirement, before retirement, there's no age limit for that. What I'm going to get into is the QCD, which that stands for a qualified charitable distribution. And before I get into the specifics and the considerations that you need to be aware of, I first just wanted to give an example of when this could make sense. So imagine yourself having plenty of income from pensions, Social Security in your portfolio, but now you have to take RMDs. And when you have to take RMDs, they tell you exactly how much money has to come out of your retirement account. And that could potentially put you into a higher tax bracket or just mess up, your overall tax situation. And so if you realize you don't need all of that income and you're charitably inclined, what you can do is make a qualified charitable distribution directly from your IRA to a charity of your choice. And whatever amount that you donate to charity reduces your RMD balance by that. So in the event that your RMD is $100,000 for the year, you can do all of that or a portion, and whatever you decide just kind of gets knocked off the RMD balance. And so this can be a very powerful tool to help manage your taxes year to year, especially when you have things like an RMD that are out of your control. And so think of the different considerations in terms of when you can qualify for a QCD. First, there's an age limitation. You have to be 70 and a half years old. Second, there's a deadline. So the distribution has to take place before December 31st of each year. And then there's also a limit as to how much you can donate. So you can donate $100,000 from your IRA per tax filer. So if there's 2 individuals and you're filing jointly and both of you have $100,000 RMD, both of you can donate the entire balance. Now, in most cases, it's not an all or nothing proposition. This is something where year to year, you can kind of look at your tax situation towards the end of the year and decide, do I just want to take my RMD, eat the taxes and spend the money? Or do I want to donate a portion of that to charity and help minimize my tax liability come April? And so again, these are things that we can look at year to year. It's flexible, ongoing examples of just ongoing financial planning. And so, Adam, I know you wanted to wrap up with a third topic with charitable trusts.
Yeah, thanks, Colin. I think the main takeaway from the first 2 options is A gift is made to charity. That gift is irrevocable, meaning we can't take that money back. And as soon as that gift is made, those funds are earmarked for charity, and we don't reap any benefit from those assets any longer, either now or in the future. So you get a tax deduction, but you make this irrevocable gift where you no longer benefit from those assets. A charitable trust incorporates potentially a third element, which is making that gift, getting that tax deduction, but maintaining some sort of benefit from those assets over a period of time or for our lifetime. And when we think of trust, we think of legal documents, attorney's fees, and those are absolutely the case with charitable trust. They are more expensive to establish, which is a cost, but a benefit of them in the right circumstances is we still get to maintain some element of control or benefit from those assets. So there's two most common forms of charitable trust. The first being a charitable remainder trust, also known as a CRT. This is where a deposit is made into a trust account. And again, just like with donor advised fund, this deposit can be of cash or appreciated securities. Once inside of the trust, those securities can be sold for no realized taxable gain. And they're subject to the same AGI limits as the donor, advised fund potentially as well. But when inside of the trust, in case of a charitable remainder trust, we're paid an income stream on those assets for a period of time, typically over our lifetime. So the money goes into the account, it kicks back an income stream to us. And then when you pass away, the remainder, whatever's left, hence the name, goes to charity. So a great tool to leverage both the tax deduction and income stream from those assets, and then also to fulfill our charitable intent, at the end of our life. The second is a charitable lead trust, where it's somewhat the opposite, where a deposit is made into a trust account, an income stream is paid to a charity or charities over some window of time. And then at the end of that term, whether it be a number of years or our life, whatever's left, reverts back either to your estate, some other heirs, or to yourself. So there's some really unique complexities and considerations for these trusts. And again, they do involve attorneys, but could be really unique and beneficial in the right set of circumstances. And so these are just tools, right? All three of these tools that we discussed today can be looked at very differently with their own sets of pros and cons. But the main takeaway is, we've seen instances where all three of these specific tools, work well for the same client. We've seen cases where only one of the three works or none of them work. So it's really specific to your circumstances and unique needs. And these are just tools that are meant to be there to aid you depending on your specific goals and wishes. So hopefully you found this helpful. If you've got any other questions, feel free to make a comment below, subscribe, and reach out with questions. We're always here to help.